Good day, and once again, you are welcome to Bobo B Maths and Accounts tutorial. Please, wherever you are watching this video from, help us to share, like, and comment on our video, and God bless you as you do so. In the previous video, I explained what I call Introduction to Books of Accounts, and at the end of the video, I made us to realize that books of accounts are just only two, which are journal and ledger. So today, I'm going to be explaining what journal and ledger really is. So what is journal? Journal is simply a book of accounts where all transactions are being recorded on a daily basis before being transferred into ledger. I repeat, journal is a book of accounts where all transactions are being recorded first on a daily basis before being transferred into ledger. When we say journal is a book of accounts where all transactions are being recorded, how do we mean? The fact remains that every business deals with buying and selling of one or two things. Let's take, for instance, you want to buy a machine, a particular sewing machine to be sewing your bag. Once you purchase that particular machine to sew that particular bag, you have carried out what we call an account as transaction. That is a transaction. Let's assume that you need a needle to sew that particular bag, and you have decided to buy that particular needle at a particular amount. That is a transaction. Let's assume that after you have sold that bag, someone now comes to purchase those bags from you, and you sell those bags in a particular amount of money. That you have done in account will refer to it as transaction. Now, when all these transactions are being carried out, there is a particular book in which you must record all these transactions in order to enable you to determine at the end of the day whether you have made profit or you have made loss. You now see this particular book in which you used to record all these transactions is what we refer to in accounts as journal. It doesn't even matter any book whatsoever that you used to record that particular transaction. Either you buy or you sell, either you purchase an asset or you incur an expenses. Whatever books, even if it is a sheet of paper that you use to record such transaction, such book is what we refer to as journal. And that is why I said that journal is a book of accounts in which we use to record transactions. It's a book of accounts where you record transaction first before being transferred into ledger on a daily basis. And that is that about journal. Now you now see this journal, it has other different names. They call it daybook, they call it books of original entry, they call it prime books, and they also call it subsidiary books. Even though I do not personally agree that subsidiary books is a complete journal, it is just a category of journal. However, that is not where I'm going. But in some textbooks, they also call subsidiary books a journal. But that is not where I'm going today. So anytime or anywhere you see all these names being mentioned in accounts, just know that they are being referred to journal. So journal is also the same thing as daybook. It is also the same thing as books of original entry. They also call it prime books, and in some textbooks they call it subsidiary books. So journal is as simple as that. Now journal, there are also different types of journal, and that is exactly where we are going. We have different types of journal. We have purchases journal, we have sales journal, we have returns inward journal, we have return outwards journal, we have journal proper, and we have cash book. In the next video, I will be explaining what each types of this journal really means in an account. Please watch out for the next video. And now I'm going to explain the real meaning or the importance of each of these types of journal. But in order not to make this particular video to be too long, let me stop it from here and continue from the next video. So see you in the next video. Don't forget to like, comment and share on our video. Thank you.